Hello everyone. Guys, our first chapter is alternative investments, features, method, and structure. So this is the first reading of alternatives. Alternative investments comprise various types of investments that do not fall under the heading of traditional investments. So whenever anyone asks you that what is the investments, where can you invest the money? आप कहाँ invest कर सकते हैं? Where can you invest the money? Your answer will be equities, bonds. So if you invest in equity, if you invest in bonds, that is the traditional investment. Other than these traditional investment, if you invest anywhere, that is the alternative investment. If you are not investing in equity, if you're not investing in debt, if you're investing somewhere else, for example, real estate, for example, commodities, for example, infrastructure, for example, currently digital asset, all are kind of types of alternative investments. Although we are almost every one of us, almost our relatives, our friends and family are investing in real estate. Real estate is not a mainstream traditional investment. It's an alternative investment. Yes, in alternative investment, the types of investment in real estate is different. आप different ways से invest कर सकते हैं in real estate. So what are the different types of real estate? Famous, the most famous is private equity and hedge fund. We will discuss in detail what is hedge fund. We will discuss in detail what is private equity. So the number one type is hedge fund, private equity, real estate investment, whether you are investing directly or whether you are investing indirectly, that is real estate investment. Commodities, if you are investing in gold, copper, cotton, wheat, all are types of alternative investments. Infrastructure. Now, it's very common in different countries, this public-private partnership. So what government is doing the partnership with the public, and they are making investments. For example, if you want to make a bridge, so government is not going to invest the money. You as a private investor, you will invest the money and you will make the partner of the, you will become the partner of the government. So that you can invest in infrastructure even. Illiquid securities, you can invest in paintings. You can invest in any other kind of illiquid security that would fall under alternative investment. Any other investment which is not falling under traditional investment will fall under the alternative investments. Digital assets, crypto, Ethereum, other kind of these digital tokens, all will be covered under alternatives. Why people invest in alternative investments? Number one benefit is diversification. Number one benefit is diversification. Why people are investing? Because of diversification. And the other one is possible higher return from holding illiquid securities. Obviously, if you are investing in real estate, that is illiquid. You cannot sell it easily. So there are possible chances you may earn higher return on the illiquid securities. So these are the two benefits, are the two reasons that people are investing in alternative investments. Feature of alternative investments. you can call it feature, you can call it benefits, or like the advantage and disadvantage, you can call it anything. Alternative
Sorry to
investment,
interrupt,
it's
sir. What are illiquid investments? Securities, basically.
okay. Features of alternative investments are specialized knowledge required for required of managers. Okay, it's not easy to invest in alternative investments. Like for traditional investments, for equity, enough information is available in the market. You can get information from the market. You can invest. You can buy stocks by your own. But it is extremely difficult to invest directly in private equity without the manager. You cannot invest in hedge funds and without the manager. It is difficult to invest even in the real estate without having the specialized knowledge. So here in alternative investments, you need a person who is specialized in private equity, hedge fund, real estate, crypto, who can guide you so that you can invest in the market. So specialized knowledge required of managers. So there would be specialized manager. Like I am working in a company, so I have the specialized knowledge of private equity. So I am guiding the investor that you can invest in these avenues. Then the second is it is proven that it has a low correlation with traditional investment. Low correlation means, for example, if this is equity and this is alternative investment. So the correlation between is on the lower side. For example, it is 0.35. So if equity is going down, that doesn't mean alternative will also go down with the same proportion. Whenever there is a low correlation between two asset classes, it will give you the benefit of diversification. For example, if you have invested in Apple stock, and you have also invested in Nvidia stock, so both are trading on the same market, both are stocks, both are tech related. So their correlation will be high. But the correlation of equity, the correlation of stocks with alternative is on the lower side. So it will give you the benefit of diversification. So if you are a fund manager, you can invest some of your money in the equity, you can invest some of money in the alternative. You can save yourself. You have obviously, guys, you have heard one point, do not put all your egg in the same basket, the famous quote of Warren Buffett. So if you're investing all in the equity and equity market got crash, you will face loss. But if you have invested some amount in the alternative, some amount in the equity, like it is kind of a relief for you. But to be honest, in bad time, जब market crash होती है, whenever market crashes, it will hurt all the asset classes. But still, in theory, it will provide you low correlation. Less liquidity. It is not easy. There is not a proper market for alternatives. If you have invested in hedge fund, it is not easy to extract your money back. If you invested in private equity, it is not easy to get your money back. If you invested in real estate, it is not easy to sell the typical property, typical building. If you invested in infrastructure, for example, you have invested in your money in building a bridge or road, it is not easy to sell that infrastructure. Yes, few of the alternatives are liquid, but majority are less liquid. Longer time horizon. You have to invest for a longer period of time. Few alternatives are like cryptos, digital assets. You can invest for short period of time. Otherwise, if you're investing in hedge fund, if you're investing in private equity, if you're investing in real estate, you have to invest for longer period of time. large size of investment. You need to invest large amount, even for hedge fund, private equity. For example, I was evaluating a private equity fund recently. So the minimum ticket size was $1 million. Like if you want to invest in that fund, you should have $1 million. Obviously, I was evaluating from my company perspective. So in order to become an investor, we need to invest $1 million. Difficult to appraise performance. Like for equity, it's very easy. On first, Apple stock is $180. On second of the month, Apple stock is $181. On third, Apple stock is $184. You can appraise the performance. It's going up. But if you have invested in private equity, private equity has invested in startup. How to appraise that? You have invested $1 million in 2024. Obviously, if you're running a fund, in order to close your books, you should know that what is the value of this $1 million. What is the value of $1 million? Just think according to the accountant perspective. You have invested $1 million. At the end of the year, in order to close the books, you should know that what is the value of that $1 million in 2025 after 1 year. There is no way to judge that. There is no value available. So it is extremely difficult to appraise the performance, that what is the value of that particular investment after 1 year or 2 years. So how to evaluate that? So in private equity, if that startup has raised money in 2024, for example, at $40 million, for example, at $10 million, you have invested $1 million. So your share is 10%. So for example, in 2026, the startup is again raising the money. ये दोबारा पैसा raise कर रहा. And now its value is $20 million. So you will be able to know that you have a 10% share of this company. So if this company is able to raise funds now at a $20 million valuation, so your 10% worth is now at equal to $2 million. Otherwise, there is no way to judge the worth of your investment. If you have invested in property, for example, you have bought a land value equal to 100 million. How to appraise the value of, how to judge the value after 1 year? You can do the market survey. You can check that what is the value of the nearby land, how much people are offering for that, what is the value of the land on zameen.com or other website. That is okay. You can nearly judge it. But for private equity, for hedge fund, it is difficult to appraise the performance. That if you have invested 1 million, what is the worth of that 1 million now? Unless the company do the round again, company does the valuation again. Otherwise, for alternative, it is difficult to appraise the value, to appraise the performance. And there is information asymmetry. What is information asymmetry? You are an investor. You are an investor and you have invested in a fund. Okay, and that fund is managed by a manager. That manager has a complete information about the fund. You cannot interfere in that fund. You cannot participate in that fund. You cannot take the decision of that fund. आप उसमें participate कर ही नहीं सकते. You cannot participate in that fund. So what will happen? There will be information asymmetry. Manager has the information you don't have. Manager has all the information you don't have. Sir, that is also happened with the stock. For public listed stock, still enough information is available. Still, there is an annual general meeting. Still, after 3 months, you have to publish the reports. Still, after 6 months, you have to publish the financial statement. But in the fund, that is not the requirement, especially for the hedge fund, there is no requirement. And plus, whatever the fund manager giving you the information, you have to rely. आपको उसके ऊपर rely करना पड़ेगा. For public stocks, at least there is some scrutiny. There is some SECP, SEC, FSA in UK. There is some regulator. But for private equity, there is no. For hedge fund, there is no such regulator. So it is extremely difficult to get the information. So these are the features of alternative investments. There are three broad categories of alternative investments. Number one is private capital. Number two is real assets. Number three is hedge fund. Okay, we will cover all this in detail in next chapters. Private equity is if you are investing in the equities of private companies, that is roughly called private equity. You are a wealthy investor. You are investing in startups. You are investing in private companies. You are investing in good looking SMEs, private companies. All is covered in private equity. So private equity, in simple words, if you're investing in the stocks of, in the equity of private companies, that is the private equity. Okay, leverage buyouts. This is another one. Leverage means borrow. Buyout means to buying its own equity. So if you are using borrowed money to purchase equity in companies, that is called the leverage buyout. What is leverage buyout? You will borrow from the market and you will start buying back the equity of that company. That is leverage buyout. So you will borrow money and buying back the stock. Buyout means buying the equity. Leverage buyout means you will borrow money and you will start buying the stocks, equity of that particular company from the market. That is leverage buyout. Next is venture capital. Venture capital is when you invest in a private company, but at a very early stage, at startup stage, mainly at the startup stage. So what is the difference between private equity and venture capital? Venture capital is a kind of a private equity. Okay. Venture capital invest in innovative ideas, startups at early stage. Okay. Early stage. So private equity is investing in private companies, but venture capital is especially investing at a early stage of startups. So word startup is suitable for venture capital because venture capital normally invest at early stages. Okay. Not at the idea stage. After the idea stage, but at an early stage. Then real assets mean real estates. Then natural resources, you're investing in commodities, farmland, timberland. So real estate is if you're investing in residential properties, commercial properties, or even if you're investing in real estate backed debt. Maybe you have heard about mortgage backed securities. So any investment where you are taking directly or indirectly exposure in the real estate, that is real estate investment. Natural resources mean you are investing in commodities. Directly or indirectly. Directly means you will buy the commodity itself. Indirectly means you will buy the derivative of the commodities. Now, to be honest, if I ask you that cotton is going to increase, cotton price is going to increase. So what you will do? Buy the cotton. It's not physically possible for you to buy the cotton because you need to arrange some location. You need to arrange a warehouse. You need to buy the cotton, arranging the dealer. It is like a hassle for you. But you can buy the cotton through derivatives. So directly or indirectly, if you get exposure in the commodities, that is real asset. Then farmland. You will take a land and start growing some crops on it. That is farmland. Timberland. It's kind of a forest land to grow the trees, to harvest the trees. So all commodities, farmland, timberland will be covered in natural resources. We will cover in detail in next chapters. Infrastructure. If you're investing in roads, airports, bridges, especially public, private partnerships, that is infrastructure investment. Then digital asset investment. Cryptocurrencies, digital tokens, these are very common now. Bitcoin is very common. Maybe in a daytime, you must have heard Bitcoin on a regular basis. हर दूसरा बंदा बोल रहा होता. Hedge funds is another broad category of alternative investment. There's a proper chapter on this. So how to invest in alternative investment? There are three ways. Number one is direct investing. We will cover this. Let's have a look on this. Direct investment is directly you will invest in some firm, in some company, in some investment. You should have some technical knowledge for that. So it is very common here, especially in GCT nowadays. Okay, it's very common in GCC. They have obviously huge amount of wealth. So they normally hire a investment manager, probably like CFA. So that manager will evaluate the investment and they will invest directly in that particular investment, that particular company. That is direct investment. There is another way of investment, that is fund investment. What is fund investment? You will invest in a fund and that fund will handle the investment. For example, that fund name is ABC fund. Okay, that ABC fund has lots of CFAs, lots of MBAs, and that fund will invest in 1 startup, 2 startup, 3 startup, 4 startup. So what's your role? You will invest in that particular fund. Your role is more like limited partner. Fund role is more like general partner. You will be investing money and they will be managing your money. All the management headache, they will bear that headache. You will only invest, but obviously you have to pay the fee. Okay, what is co-investment? Co-investment is you are part of the fund management. You have invested in the fund, but for example, that fund is investment in this particular idea. And its idea is, for example, their idea is digital token. You have invested in that fund and that alternative investment fund manager has proposed this investment to you and you really like the idea. You said, okay, we have invested in this fund. That fund is investing in this idea, but we will also directly invest in this investment. So that is called the co-investment. If you have invested some money through the fund, and if you directly invest some amount in the same ideas, same investment, that is called the co-invest. Co-invest means you are still part of the fund, but some of the money you are routing directly and some of the money through the fund. That is co-investment. So in fund investment, using a fund manager to invest in the fund, investor has no control over the fund. You are limited partner. You have no control over the fund. You have to pay management fee and performance fee. And it's like venture capital. This fund is like venture capital. They are investing in different ideas and you have only invested in this fund. Okay, co-investment is using a fund manager to invest in the fund and invest directly as well. Co-investment, you are tag along with the fund. You are part of the fund. You are invested in the fund, but you are also investing directly. Okay, it's a fee will be in co-investment, there will be lesser fee compared to the fund management because you are investing directly. You are taking this directly. More control because you are investing directly. So you have a more control. Investor can gain skills to learn direct investment. Obviously, when you start investing co-investment, you will gain the skill. And sooner or later, you can invest directly. In direct investment is purchases, as I said, directly, no fee to outside manager. Low diversification. Why low diversification? Because if you're investing directly, you have to invest huge amount. In fund, if minimum ticket size is $1 million, in direct investment, you have to invest 10 million, 20 million, $30 million. So your diversification will be lower because your huge amount will be stuck here. If you invested in the fund has invested in many investments. अगर आपने fund में पैसा डाला है, fund ने आगे 50 जगह पैसा डाला होगा. If you have invested in the fund must have invested in many investments. So your diversification will be higher in fund. Here, your diversification will be lower. Higher amount to invest, greater expertise required for the investors. So this direct investment is also very common here. So especially it's a job exposure for you people. You can get the job in future in direct investments. Okay, general partner, limited partner is the general structure. General partner is the fund manager who makes all the decisions. Limited partners are the investors. And these limited partners are not the typical investors. These are accredited investors. These are the high net worth investors, qualified investors who have sufficient wealth. Okay. So this is the fund. Fund is managed by a general partner. Investors are limited partners. And if the fund defaults, limited partners have limited liability. They will suffer loss only to the extent of their investment. Rest, all of the loss will belong to the general partner. Okay. Okay. One more important point here. If limited partner wants to invest like $10 million, the limited partner, and limited partner wants to invest $10 million. This is called the committed capital. It is not mandatory that LP limited partner invest committed capital all in a once to the fund. Limited partner will only commit that I will invest $10 million. As soon as general partner identify the investment, general partner will draw this money. So maybe general partner takes 1, 2, 3 years to draw this money from the limited partner. So limited partner will give their commitment that, okay, we are committing that we will invest $10 million. For example, on 1st January 2025, we are committing that we will invest $10 million. That doesn't mean we will transfer that money to the GP. No. As general partner identify the investment, they will draw 1 million. They identify next investment, they withdraw 2 million more. So that's how it will work. Okay. Next is limited partnership agreement. These are the basic terms. The rules and operational detail that govern a partnership, that is called the limited partnership agreement. Side letter, a special terms that apply to one limited partner but not to others can be stated in. For example, this is a fund. We are the general partner and there is one limited partner, there is another limited partner. And now we are connecting another limited partner. But in order to attract this limited partner, we have to offer some special terms, which we didn't offer them. This limited partner has invested. This limited partner has invested. Now we are marketing the next limited partner. एक नए बंदे को लेकर आ रहे हैं. So in order to attract the new person, we are offering some special term to that person that will be written in side letter. Special terms that apply to one limited partner but not to others. Okay. Next is most favored nation clause. Okay. Let me tell you a story. I was evaluating an investment in a new startup company. That startup company was dealing in digital token. Okay, they want us to invest $6 million. Okay, I was evaluating, and when I read the agreement, HSBC had already invested in that fund. And one of the representative of HSBC was sitting on the board of directors. I said, we will be agreeing to invest in your company if you offer us the same terms which you have offered to the HSBC. That is called most favored nation clause. Some limited partners may require that special terms offered to other LPs also be offered to them. So we demand that, okay, you have given special status to the HSBC, special terms to the HSBC, offer us the same, we will invest. That is called the most favored nation clause. Then master limited partnership are the most common in funds that specialize in natural resources or real estate that can be publicly traded. So this master limited MLP is most famous in natural resources or real estate. Okay, this is the structure. This is the LP structure. This is a direct investment. This is a co-investment. You are the limited partner if you are investor. This is the general partner. And this is the fund. Fund is managed by the GP. Fund is invested by the LP. And this is the public-private partnership. Example, kind of a pictorial way of explanation. So this is the public sector, any ministry, foreign, like government ministry. So what they will do, they will make a special purpose entity. एक special company बनाएंगे, special purpose vehicle, special purpose entity through a PPP contract. So some private persons will invest in a shape of private equity. Project sponsor, equity holder, the public investors, wealthy, rich investors will invest in that special purpose entity. And debt holders, banks, lenders will invest and will give debt to that special purpose entity. And that special purpose entity will make some bridges, roads, airports, some other infrastructure, and will earn the money and distribute interest to the debt holder and distribute income to the equity holders. This is very common in many countries. It's public-private partnerships. Okay, fee is very important in alternatives. Normally, management fee varies from 1% to 2%. And management fee is applicable on the committed capital, not on the drawn capital. It is applicable on the committed capital. For example, if committed capital is 10 million, but fund is only using 1 million, fund will charge fee on 10 million. This is important. Second, normally management fee is applicable on asset under management, AUM asset under management. So you have to read the wording. Starting value or ending value. Okay. Guys, you have to be very careful whether management fee is applicable on the opening value or the closing value. This is important. Management fee is applicable, but it would be dependent upon the question whether it is applicable on the opening value or the closing value. ये देखना आपने. You have to be very careful. Then there is a performance fee. Performance fee, incentive fee, success fee, and so it is written sometimes, but it is very common carried interest. I have written this carried interest in each and every document. So although it is written sometimes, but mainly it is called the carried interest. Paid at the year end after management and other fee. Normally performance fees, success fee, carried interest will be paid after paying the management fee at the year end. Carried interest can never be paid in advance because you don't know whether you have performed or not. It will be paid at the end of year end after the management fee. Okay. Committed capital is usually drawn down over the 3 to 5 years. So for example, committed capital is 10 million and you have only drawn 1 million. So the capital which hasn't been drawn yet, that is called the dry powder. Just remember the term. The reason for basing management fee on the committed capital is that otherwise the fund manager would have an incentive to invest capital quickly. अगर हम fee को committed capital की बजाय drawn capital पे रख दें, तो what will happen? Committed capital is 10 million. Capital drawn is 1 million. So fee is on this. If fee is on the actual drawn capital, let's suppose what will happen? If I'm the manager, I will quickly invest all the money. Quickly invest just to earn the fee. I will not bother whether the investment is good or not. So that's why management fee is on the committed capital. Then there are few other terms. These are very important terms. The slide is very full. Hurdle rate. Hurdle rate is if I am the limited partner, that means I am the investor. And you are the manager. And manager is general partner. And I am investing, for example, 100 million. And you are earning like 2%. And you are saying, I have earned 2%, give me the performance fee. So I will say, man, you have only earned 2%. I would have earned 5%, 6%, 7% by investing in a bank. What you have earned? So then there's a term comes that is called the hurdle rate. In order to earn the fee, you need to cross some base rate. You need to cross some base rate. That base rate is called the hurdle rate. Hurdle rate can be hard hurdle rate or the soft hurdle rate. Okay, what is that? So what is your actual return? For example, 20%. So what is the hurdle rate? For example, 12%. So hard hurdle rate is fee will be paid on 20 minus 12. You will pay fee on this. We will pay you fee, but on the excess earnings which you have earned over the hurdle rate. What is soft hurdle rate? Soft hurdle rate is cross the hurdle rate, but once you cross the hurdle rate, fee will be paid on the total rate. So soft is more favorable to the GP. Hard hurdle rate is more favorable to the LP. So soft is, if soft hurdle rate is met, performance fee are percentage of the total increase in value of each partner investment. Hard hurdle rate performance fees are based only on gains above the hurdle rate. So soft is applicable on the total return. Hard is only applicable on the gain above the hurdle. Then comes a term called catch-up clause. It's little technical. So let me explain you. For example, catch-up clause, by the way, it's a kind of a clause which is favorable to the general partner. For example, hard hurdle rate is let's suppose 8%. Fee is 20%. And the return is 18%. If nothing is mentioned, only this information is given. So I will ask you to calculate the fee. You will calculate fee in this way. 20% into actual return minus the hurdle rate. So what is the answer? 2%. Either fee will be 0, या तो fee 0 होगी, या it will be positive number. That is 2%. Okay. But now comes a term called catch-up clause. What is catch-up clause? Catch-up clause is more favorable to the general partner. So what catch-up clause is saying? Same example. Okay, if there is a hard hurdle rate 8%, fees 20%, return is 18%. Number one step, distribute up to the hurdle rate to the limited partner. Give 8% to the limited partner. Then give all of the return. Then give enough return, not all, enough return to the general partner so that their fee is, they can recover the 100% fee. So you will distribute 2% to the general partner. Okay, you have earned 18%. 8% up to the hurdle rate you will distribute to the LP. Then you will distribute enough to the general partner so that general partner can recover 100% their fee. So their fee is 2%. So they will recover 100%. Okay, still return is there. Yes. Now distribute it on 80-20 principle. Why 80-20? Because 20% belongs to the general partner. So now what is the remaining? Total 18, 8 gone, 2 gone, 10% is remaining. So out of 10, 8% is remaining. Out of 8%, 20% of the 8% will go to the GP, and remaining will go to the, so LP return is 8 plus 6.4, 14.4. General partner return is 2 plus 1.6, 3.6. This is called the catch-up clause. So if there is no catch-up clause, how to distribute the return? hurdle rate 8%, fees 20%, return is 18%. What you will do, formula is fee into return minus hurdle rate. 2% will be the fee of general part. Okay. What is the return of the LP? 16% remaining. But if there is a catch-up clause, firstly, up to the hurdle rate, you will give to the LP. Then you will give enough fund to the GP, enough return to the GP so that he can recover his full fee, 2%. Still funds are available, distributed on 20-80%. Okay. So indirectly, GP is earning more. LP is earning 14.4, GP is earning 3.6. So here, in a simple way, LP will get 8%. There is no catch-up clause. You will give 2% to the GP. Remaining 8% will be to the LP. So LP will earn 16, GP will earn 2%. But in a catch-up clause, firstly, you will give 8% to the LP, 2% to the GP, and remaining, this is remaining. You will distribute 20-80. So catch-up clause, an agreement that favors the GP. A GP who earns 20% performance fee, a catch-up clause allows the GP to receive 100% of the distribution above the hurdle rate until he or she receives 20% of the profit generated. Then every excess dollar is split between 80 and 20. So in short, you have to remember, in catch-up clause, GP is at more favorable position. Okay, few more terms, high watermark. High watermark, which means no performance fee is paid on gains that only offset prior losses. This is a very important point. For example, in 2025, your return is 20%. And you have earned a fee. In 2026, you have done a loss of, for example, 30%. So here you will earn no fee. In 2027, if you are earning 20%, you will not earn a fee here. Why? If there is a high watermark clause, that means you should have earned enough return to offset the previous losses. Otherwise, what will happen? In loss year, you will not earn fee. In next year, definitely, if any 1 year stock market has crashed, in next year it will go up. You cannot claim profit. You cannot claim performance here. In order to prove your performance, you have to offset the losses. This is the high watermark, which means no performance fee is paid on gains that only offset prior losses. Thus, performance fee are only paid to the extent that current value of the investment account is above the highest net of fee value previously recorded. For example, in year 1, if the asset value is 110, in year 2, if it is 100, there will be no fee. In year 3, if it is 107, you will not earn a fee because you have not approached the highest value yet. And if in next year you have earned 117, so you will not earn, you haven't performed 17. Your return is only 7. So high watermark means you have to cross the highest ever value which that fund has generated. In simple words, you have to offset the previous losses in order to earn the fee. Okay, waterfall has two structures. There are two types of waterfall. One is American waterfall, other is European waterfall. It's very important terms. American waterfall is favorable to the GP, general partners. Profits are distributed as each fund investment is sold and shared according to the partnership agreement. For example, you have invested in 3 investments. investment number 1, investment number 2, investment number 3. On investment 1, you have earned 40%. On investment 2, you have lost 25%. On investment 3, you have earned 10%. So American waterfall will consider all these investment in isolation. You will earn performance fee on this. You will not get any fee on this. You will again earn a performance fee on this. So technically, you are claiming performance fee on 40 plus 10, 50% return. But actually you have not performed 50%. You have performed 25% on net basis. In European waterfall, it is different. LP receive all distribution until they have received 100% of their initial investment plus the hurdle rate. Here, it will be netted off. You have to cross all, you have to cover all the previous losses. Okay. Here, if there's the same example, you will net all of these, and on the net, you have to pay the performance fee. So European waterfall is more favorable to the LP. American waterfall is more favorable to the GP. So this is important. Okay. So you can also identify using the name deal by deal. Separate. Deal 1 separate, deal 2 separate, deal 3 separate. Whole of the fund. So we have to think according to the whole of the fund. So European whole of the fund. How to recall? In Europe, there are many countries. So you have to think their monetary policies, by the way, for the whole Europe. Although American is a United States, but these are just the states, not the country. Okay. Remember in this way. European Union. So whole of the fund, American deal by deal. By the way, whenever you go to restaurant, वो हम कहते हैं ना, American system करते हैं, अपना अपना. So it's more like that. Deal by deal. Okay. Next is clawback. Clawback provision. Okay. In a very simple term, a clawback provision is a rule that allows investor to recover some of the money they have paid to the fund manager if the fund overall performance does not meet the criteria. If in a previous year you have paid the fee, but in next year the fund is making losses, you can recover your fee back. So in 2025, there was a good performance and you have paid the fee. In 2026, loss. 2027, loss. So you can recover back your fee, which you have paid earlier. A clawback provision stipulates that if the GP accrues or receive incentive payment on gains that are subsequently reversed as a partnership exit deal, the LP can recover previous incentive payments. So with a deal by deal waterfall, successful deals might be exited initially while losses are realized later. A clawback provision would allow the LP to recover these performance fees to the extent that subsequent losses negate prior gains. So in first investment, there's a 40% gain. You have paid the fee. In second investment, you have a loss. For example, 30% loss. So you can recover up to the 30% fee, you can recover back from the general partners. That is clawback provision. So clawback provision is more favorable to the LPs, to the limited partners. So if there is a clawback provision, limited partner feel more secure. It is kind of a surety of fairness. That means GP, general partners are not against them. They will earn the fair profit. Okay, that is all for the first chapter. अगर आपको कोई question है, so you can ask now. कोई क्वेश्चन है यहाँ तक?
अस्सलाम वालेकुम सर। सर क्वेश्चन ये था कि इसका जो कोड रिलेशन है, जो शेजर के नोट्स हैं, ये उसी के रेफरेंस से हम पढ़ रहे हैं और उसी से सारी चीज़ें साथ साथ चल रही होंगी, बिकॉज अभी मेरे
जी
पास
जी,
नोट्स
ये
नहीं है
श्वेजर के कोरिलेशन, आपने अच्छा वर्ड यूज किया वैसे। श्वेजर के नोट्स के साथ ही बिल्कुल है। और जो श्वेजर में कम लिखा हुआ है या इरेलीवेंट लिखा है, और इरेलीवेंट तो नहीं लिखा, कम लिखा है या इनफ नहीं लिखा, वो मैं जो सीएफए का करिकुलम है उससे भी कवर कर।
तो सर आप तो कवर कर देंगे, व्हाट वी नीड टू डू, मतलब हमारे पास तो नोट्स होंगे, तो क्या हमें वो
नहीं, आपने कुछ
करिकुलम
नहीं करना
लेके
है,
फिर
ये आपको स्लाइड्स मिल जाएंगी, स्लाइड से कवर कर लेंगे।
ओके।
आप अगर श्वेजर के नोट्स नहीं पढ़ना चाहते, इन स्लाइड से भी आप पढ़ सकते हो, उसमें इनफ लिखा हो। अब ये देखो ना, ये दीज टू, ये आपको श्वेता के नोट्स में नहीं मिलेंगी, ये आपको श्वेता के नोट्स में नहीं मिलेगा, ये नहीं मिलेगा, ये जो है पिक्चर।
सर और ये स्लाइड्स कहाँ पे अवेलेबल होगी, ये जो हमने अभी पढ़ी?
ये एलएमएस के ऊपर हो जाएंगे अभी।
एलएमएस के ऊपर?
हमें क्लास तो
फाइन
खत्म होने दो।
सर, मैंने क्या सारे सवाल कवर कर लिए, उनका बेसिक तो कॉल स्टूडेंट्स है।
हो जाएंगे, हो जाएंगे। एनी अदर क्वेश्चन गाइस? सॉरी, आप में से किसने क्वेश्चन पूछा था वो लिक्विडिटी का? मैंने वो कवर कर दिया था वैसे, अगर फिर भी किसी का क्वेश्चन तो प्लीज बता।
सर मेरा क्वेश्चन है,
नहीं
ये जो म्यूचुअल फंड्स होते हैं ये भी इसमें आएंगे?
नहीं नहीं, म्यूचुअल फंड इन्वेस्ट कहाँ करता है? इक्विटीज में ना,
यस।
या फिक्स इनकम में, तो वो ट्रेडिशनल इन्वेस्टमेंट।
ठीक है।
आप बस ये सोच लो, अदर देन इक्विटी एंड डेट, जो मेजोरिटी इन्वेस्टमेंट्स है ना, वो अल्टरनेटिव इन्वेस्टमेंट्स। These are, by the way, these are very common in other than Pakistan, by the way. पाकिस्तान में नहीं हो रहा अनफॉर्चुनेटली, लेकिन बाहर बहुत कॉमन है। मतलब आई रिसेंटली मूव्ड हियर, इतनी ज्यादा इन्वेस्टमेंट्स हैं, इतने ज्यादा आइडियाज हैं, इतने ज्यादा स्टार्टअप्स हैं, यू कांट इमेजिन। और अगर आप इफ यू मूव बाय चांस, इफ यू मूव यूएस, तो ये हेज फंड्स और ये, तो वहां तो फिर इट्स लाइफ इज टोटली डिफरेंट।
सर मेरा एक क्वेश्चन था कि सर जो परफॉर्मेंस फी होती है वो बेस्ड ऑन परफॉर्मेंस होती है, लेकिन उसके अलावा जो फिक्स्ड फी होती है वो तो पे करता है एलपीजीपी को।
जी, वो दैट इज कॉल्ड द मैनेजमेंट फी ना,
जी सर।
वो पे होनी होनी है।
तो मैनेजमेंट फी और परफॉर्मेंस फी में डिफरेंस है? मैनेजमेंट फी फिक्स्ड होती है और
मैनेजमेंट
परफॉर्मेंस फीस?
फी इज ऑन द कमिटेड कैपिटल।
जी सर।
परफॉर्मेंस फी इज कैरिड इंटरेस्ट, इज बेस्ड ऑन द परफॉर्मेंस।
ओके सर।
You have increased the asset value, then you will be eligible to get the performance fee।
जी सही है सर। और
Otherwise
सर आपने बताया था कि जो फंड्स होते हैं इनके ऑडिट्स नहीं होते, तो सर जैसे अब ये कंपनीज हैं, बाइनांस हो गया, क्रिप्टो में इन्वेस्टमेंट्स होती हैं, तो इनके भी ऑडिट्स नहीं होते?
देखो, नहीं, ऑडिट ना होने का मतलब कुछ और।
जी।
अब आपने, इफ यू हैव आइडिया, इफ आई टॉक अबाउट द कंपैरिजन बिटवीन पब्लिक कंपनी एंड प्राइवेट कंपनी, ऑडिट दोनों को होता है।
जी जी सर, बिल्कुल दोनों का होता
और किसका कंपैरेटिवली जरा सही वाला ऑडिट होता है?
है पब्लिक कंपनी का।
प्राइवेट कंपनी में तो यू नो
या
व्हाट
जी
हैपेंड।
जी सर। जी सर बिल्कुल।
तो फिर ये तो उससे भी एक स्टेज नीचे है।
जी। यस। राइट।
इसमें तो रिपोर्टिंग भी आपकी मर्जी के ऊपर है। हम
जी
आगे
जी।
जाके अभी पढ़ेंगे नेक्स्ट चैप्टर में कि हेज फंड्स ओनली रिपोर्ट्स दोज इन्वेस्टमेंट्स विच आर सक्सेसफुल।
राइट।
उसको हम कहते हैं सर्वाइवरशिप बायस।
सही।
बाकी आपको रिपोर्ट करने की जरूरत ही नहीं है। अब आपको कैसा, दिस इज अनएथिकल, दैट इज अनएथिकल, बट हु विल टेस्ट, हु विल चेक? नो वन,
राइट सर। राइट सर।
बिकॉज रेगुलेटर्स आर नॉट नॉर्मली कवरिंग देम।
राइट सर। राइट।
कि प्राइवेट
और
इक्विटी में
सर
आपने पैसा लगा दिया,
जी जी
प्राइवेट इक्विटी वाला कहता है मैं आपको 4 गुना पैसे बना के दे दिए मैंने अगले साल।
जी सर।
अगले साल 4x कैसे हो गए पैसे? वो कहेगा आपके आपने जो प्रीवियस ईयर मार्केट वैल्यू वाज 10 million, नाउ मार्केट वैल्यू इज 40 million।
राइट सर।
हाउ? कैसे? बस वो दैट इज अनलाइज गेम। हाँ, इफ यू वांट टू सेल इन द मार्केट देन देयर वुड बी अ रियल टेस्ट, अदरवाइज इट इज ऑल ऑन पेपर। आप
राइट
ऑब्जर्व
सर।
करना प्राइवेट, ऑल ऑफ दीज स्टार्टअप्स हैव मार्केट वैल्यू इन मिलियंस ऑफ डॉलर।
राइट सर। राइट सर। सर इसके अलावा वो आपने एक जो परफॉर्मेंस फीस आप कैचअप क्लॉज पढ़ा रहे थे उसमें सर जो परफॉर्मेंस फी होती है वो सर उसमें से एलपी का शेयर क्यों होता है? बेसिकली एलपी तो इन्वेस्ट कर रहा होता है ना
नहीं,
फंड में।
नहीं, एलपी का सारा पैसा मिलना ही एलपी को है ना। परफॉर्मेंस वो जीपी तो अपना हिस्सा रख के उसको दे, वो वाला
अच्छा
शेयर।
सही है। तो परफॉर्मेंस में जो आपकी आपने वो कैचअप क्लॉज पढ़ाई थी उसमें जो परफॉर्मेंस की परसेंटेज थी उसमें से तो परफॉर्मेंस की वो एलपी को भी जाती है उसमें से फी और जीपी को भी शेयर जाता है?
शेयर शेयर जाता है।
शेयर जाता है। शेयर जाता है सही है ठीक है
सर बस
ओके।
आप, पैसा किसका है? एलपी का।
एलपी का है बिल्कुल।
सारा परफॉर्मेंस के ऊपर हक भी किसका बनता है? एलपी का।
एलपी का पड़ता है
एलपी तो सिर्फ
बिल्कुल
अपना एक
बिल्कुल।
पोर्शन लेता
जी जी सही है सही है ठीक है। और सर जीपी इन्वेस्ट कर सकता है उसमें फंड में?
है। जीपी करता है, उसको जरूरत ही नहीं है, इसको पैसे जो आ रहे हैं।
सही है चले सही 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 ओके सर।
जीपी अगर करेगा तो वो एज ए इन्वेस्टर बन के अपने
जी
फंड
जी
डालेगा और फिर वो उससे इन्वेस्ट करेगा।
ओके सर या क्लियर सर।
सर एक क्वेश्चन है, अगर एलपी ने अमाउंट कमिट की हुई है $10 million की और जो है उसको लॉसेस आ जाते हैं इन्वेस्टमेंट जहाँ पे की हुई है और उसका विड्रॉ हुआ है $2 million, तो उसके ऊपर लाइबिलिटी 8 million की उसकी विड्रॉ कर सकते हैं या वो विड्रॉ नहीं करेगा अगर कंपनी डिफॉल्ट करती है या जॉइंट वेंचर जो भी डिफॉल्ट करता है तो?
तो वो आपकी मर्जी के ऊपर है ना, आपके पैसे हैं। इट्स नॉट लाइक कि वो एलपी ने सॉरी जीपी ने डिसाइड किया और आपके अकाउंट से पैसे निकल गए। अगर नेग्लिजेंस आप डिक्लेयर करते हैं, मत पैसे दें। देयर इज नो थ्रेट ऑन
यानी
यू।
कमिटेड का मतलब ये नहीं है कि आपको आप लाइबल हो जाएंगे, देने ही देने पड़ेंगे आपको?
नहीं नहीं, आप आपके पास पैसे हैं, आप इन्वेस्ट करना चाहते हैं, आपको इन्वेस्टमेंट अच्छी लग रही है, आप इन्वेस्ट करेंगे। और ये नहीं है कि वो लॉसेस कर रहा है, परफॉर्मेंस अच्छी नहीं दिखा रहा, तो आपके ऊपर बाइंडिंग हो गया। नहीं, ऐसा नहीं है।
बाइंडिंग नहीं है, ओके
लेकिन फी आपसे वो सारी के लेगा क्योंकि आपने कमिटमेंट की हुई है।
सही है।
या फिर आप उसे रीनिगोशिएट करेंगे टर्म्स और फी अपनी कम, वो कमिटमेंट कम कर लेंगे, ये भी हो सकता
ओके ओके।
है। और अगर बहुत अच्छी परफॉर्मेंस दिखा रहा है वो, तो फिर आप निगोशिएट करके अपना कमिटेड कैपिटल ज्यादा भी कर सकते हैं। इट्स मोर लाइक प्राइवेट कॉन्ट्रैक्ट ना, निगोशिएशन, इट्स ऑल डिपेंड्स अपॉन द निगोशिएशन।
बार बार चेंज हो सकता है कॉन्ट्रैक्ट आपका?
चेंज हो सकता है। लेट मी गिव यू द एग्जांपल। एक कंपनी आई, उन्होंने, हमने उस पर इन्वेस्ट किया जब उस कंपनी की प्रीवियस वैल्यू थी एट $6 million। इन द सेकेंड राउंड, वो जब एक दफा पैसा रेज करते हैं ना, उसको एक राउंड कहते हैं। इन अ सेकेंड राउंड दे केम अप विद अ वैल्यूएशन ऑफ $40 million। अच्छा, टेक्निकली हम खुश हुए कि हमारी पिछले वाली इन्वेस्टमेंट तो बहुत ऊपर बढ़ गई। जब मैंने उसको वैल्यूएट किया तो मैंने कहा कि भाई, योर कंपनी वैल्यूएशन इज नॉट वर्थ ऑफ $40 million, यू हैव डन नथिंग। अच्छा, दे वर वेरी कॉन्फिडेंट, दे हमने पैसा, कहते हैं जी आपकी आपकी आपके पैसे डाइल्यूट हो जाएंगे। लाइक, इट्स लाइक सेकंड राउंड इज लाइक अ राइट इशू। आप नहीं डालेंगे, कोई और डाल देगा। अच्छा, चले गए वो। दे केम बैक आफ्टर 2 months। आफ्टर 2 months दे अनएबल टू रेज एनी मनी फ्रॉम द मार्केट, और उन्होंने सेकंड राउंड दोबारा उसी वैल्यूएशन पे किया, 7 million। और फिर हमने साइड लेटर लिखवाया, हमने पढ़ा था ना अभी साइड लेटर। हमने साइड लेटर लिखवा के फिर अपने लिए स्पेशल टर्म्स और बनवा ली उसके। क्यों? बिकॉज वी आर इन्वेस्टिंग नाउ द बिगर चंक, दैट्स व्हाई। सो इन प्राइवेट इक्विटी इट्स ऑल अबाउट द नेगोशिएशन। ओके,
अगर वो फंड रेज करे ही ना तो उसकी वैल्यूएशन कैसे होगी फिर, अगर वो दोबारा फंड रेज ना करे?
नहीं, वैल्यूएशन नहीं हो सकता ना। दैट्स व्हाई वी हैव स्टडीड दैट वो appraisal, the valuation process is very difficult.
तो मुझे अगर एग्जिट करना है वहां से इस इन्वेस्टमेंट से,
You can't take
तो वो
exit
किस
in earlier years.
तो किस वैल्यू
Heavy
से करूंगा?
penalties हैं, वो लॉकअप पीरियड होगा भी हमने पढ़ना ही वाला,
ओके।
वो पहले से डिसाइडेड होगा. You can't take exit, especially in the first 6-7 years. You can't take exit.
ये टाइम पीरियड भी लॉक होता है?
टाइम पीरियड लॉक हो सकता है, फाइन लॉक हो सकते हैं.
जितने टर्म्स एंड कंडीशंस डालते जाओ बस कॉन्ट्रैक्ट में वो बनता जाएगा।
जी जी बिल्कुल. अच्छा, मैंने next chapter is very important. Chapter name is Alternative Investment Performance and Return. So performance appraisal of alternative investments. Alternative investments are more risky because you need longer time. It needs longer time as an investment. It's more involved. The borrowing is more involved, especially the hedge funds. Borrowing is more involved. In every transaction, it will be a leverage transaction. It is heavily leveraged, heavily borrowed kind of investments. Valuation based on not observable factors. It's not easy to value these alternative investments. We have discussed this. Complexity of fee, taxes, and accounting. It's not easy, especially, for example, if you have invested 1 million in the private equity and there is no second round, you have to report 1 million investment only. You can't increase your investment in your books. Fee structure is very complex in some of the transactions. So that's why alternative investments are risky. There are 3 cycles of alternative investment. Number 1 is capital commitment phase. Fund managers are identifying investments and making capital call from the partners. So this is a phase where, being a fund manager, you will only take the commitment from the LPs. This stage, you will contact LP and you will take the commitment only. So from LP, you will take the commitment, and from market, you will keep identifying investment. So you it's like you have 2 teams. One is keep identifying the investment and keep investing the money. Second is doing the marketing to the LP and take the commitments from different limited partners. Capital deployment phase, the manager fund and often involve themselves directly in the firms and projects they invest in. So here in capital deployment, you will invest the money in the market. Commitment, you will take the commitment from the LP, you will invest in the market. Capital distribution phase is the first stage where your fund start realizing the money, where you start earning the money. So after earning for few years, then you will start distributing the capital. So if this is a total life cycle of private equity, for example, 10 years. So in the first 5 to 6 years, in first 3 years, you will take the commitment from the LP. From 4 to 5 years, you will deploy capital in the market. Look, the returns are negative. From 6 year onwards, roughly 6 year onwards, you will start realizing the cash flows. So guys, if you have invested in this fund and after 3rd year, if you want your money back, they will not give you money back, because they will start earning after year 6. So खुद 6 साल बाद कमाना शुरू करेंगे. How they can give you money back? So this is more like J curve factor. In first few years, you will lose the money. Then you will start making money. Okay. Okay, it's more like J curve. In first initial years, you will lose the money technically, and then you will start making the money. So in alternative investments, you have to look for a longer period of time, to be honest. So in private equity, in alternative, if you invest in 2025, you cannot earn in 26, 27, 28. You will start earning after 2030. Okay. There are two famous measures of return. Number one is IRR. In alternative, IRR is very famous. You will earn how much IRR I will earn if we invest in your fund. 40%, 50%, 70%. Then MOIC, multiple of invested capital. If I invest now $1 million, how much I will earn? The private equity guy will say 4x. What is 4x? 4 times of your invested capital. That means your money will become 4 million. 4x. Realized value of investment plus the unrealized value of investment divided by the total amount of investment. MOIC. This term is very common. So whenever I read the pitch deck is there's a word pitch deck. Pitch deck is a kind of a investment proposal which startup companies or these private equity funds will give us to study. And on that pitch deck, it will be written that if you invest now, you will earn 40% IRR, 25% IRR, 20% IRR, or it will be written that you will earn 4x, 5x, 10x. What is the meaning of 10x? If you invest 1 million now, after 10 years, we will give you back $10 million. So this is MOIC. You can formula is very easy. Realize return, analyze, divide by the total amount of investment. Realize value of investment, analyze value of investment, divided by the total amount. So if we have invested 10 million and now the investment value is equal to 15 million plus they have given us the 1 million cash. So total is 16 million. 16 divided by 10. So MOIC is 1.6x. MOIC is, it will be given in terms of x. 4x, you have given us the multiple of 4 on my investment. Okay, this is use of leverage. Leverage is very common in alternative investments. Okay, for example, I have invested $100 million. And on my investment, I have earned 10%. So what is my return? 10%. This is the value of investment, V naught. R is the return. So my return is 10% or 10 million. So let's suppose if we borrowed the money, investment is 100 million. My equity is 40 million. And I have borrowed 60 million. Interest rate is 5%. So now what would be the return? This would be my return. For example, return is 10%. So return would be 10% into 100 million. 10 million. But I have taken 60 million loan. I have to pay interest on that. Assuming there is no tax. 5% into 60. 3 million. So my net return is 7 million. But I have invested only 40 million. So my return will be 7 million divided by 40. So my return will not be now 10%. With 10% say it will be way greater than 10%. 18% something net return. So don't be worried about these formulas. It's very simple. R is the return on the total investment. V naught is the equity which you have invested. VB is the value of borrowed money which you have invested. This is the total money, total amount of investment, minus the interest which you have paid on the borrowed money. Divide with the equity amount. This is the leverage return. So leverage return is 18%. Your original return was 10%. Simply, in alternative investments, we normally use the leverage, and leverage will maximize the leverage will increase the return. Okay. Use of leverage. There is one problem with the leverage. Leverage is that lender may issue margin calls if the fund equity position decreases below a certain level. These can result in a fund having to realize losses. So what will happen? For example, your investment is 100 million. Equity is 40, that is 60%. And if God forbids this investment starts falling and it falls below, for example, 60 million, it falls to 55 million. What will happen? You need to put more money into this because investment value is falling. You need to put more money. And if your fund is not performing well, for example, if it is a fund, if your fund is not performing well, what LP will do? LP will say, give my money back. LP will call for redemption. When you demand your money back, that means you are demanding redemption. So if LP is demanding redemption, how you can pay back to the LP? By selling investments. Your investment value is falling. And if you start selling investment, it will fall more quickly. It will increase the losses. Technically, try to understand this. You are making losses. So LPs, limited partners are coming and they are saying, give us the redemption, give us money back. How you can give the money back? By selling the investments. When the investments are already falling and when you go again to sell in the market, it will decrease the value more. So that is the biggest problem which you can face if you're using the leverage. So you are a fund, you are using a leverage. Okay. Benefit, plus side, you will earn higher return. Your return will be higher because you are using the borrowed money. आप return बहुत अच्छा कमाएं. ठीक है? It will maximize the return. There's a proper word. There is a very good word for it. It will magnify the return, leverage. But downside is, if the fund start losing, agar losses are if there is a losses, LP will say, give my money back. So what you will do? You have to sell the assets. You have to sell the investment. And if when you go to sell the investment in the market value will further go down and fund will go into problems. So that is the biggest disadvantage of leverage. Okay. Okay, this is a bit theoretical. Valuation of investments. How to value the investments. How to value the private equity investment, hedge fund investment, alternative investment, in short. A fair value hierarchy groups these assumptions into the following 3 levels. There are 3 levels to calculate the fair value of alternative investments. Level number 1. The assets trade in active markets and have quoted prices readily available, such as exchange traded securities. guys, there are some derivatives, there are some alternative investments which are directly trading in the market. For example, Bitcoin. For example, future on commodities. So Bitcoin, future on commodities, all have active market. So their fair value is easily available from the market. Level 2, the assets do not have a readily available quoted prices, but they can be valued based on directly or indirectly observable inputs, such as many derivatives that can be priced using models. So level 2 is there are some alternative investments where quoted prices are not available, but there are some models which we can use to calculate their market value. For example, Black-Scholes model, binomial model to calculate the value of derivatives. For example, present value of future cash flows to calculate the value of certain investments. But there is a third level. The assets require unobservable inputs to establish a fair value, such as real estate, private equity investment, for which there have been a few or no market transactions. So private equity investments, there is no market available. So how to value these investments? You can't calculate value for these investments. So what to do? We have to report them at a cost basis. So particularly for level 3 investment, the absence of market activity can result in valuation that remain near their initial cost for long period. As a result, these values might not reflect the actual exit cost of the investment. So importantly, this relative lack of change in the fair value can make reported returns for alternative investments appear higher, less risky, and less correlated with the traditional investments. So although we are saying that there is less correlation with the traditional investment, but maybe the reason is we unable to calculate their value. We unable to calculate their value. Okay, there are 3 levels to calculate the value of the alternative. Level 1, fair value is available. Level 2, although fair value is not available, but there are ways to calculate the fair value. Level 3, there are no ways available to calculate the value. So what to do? In that case, we have to record them at cost. Okay, these are few terms. Risk arises from investor redemption. Redemption means when investor will say that give my money back. So what you should do in that case? We know that alternative performance moves in a J curve. In initial years, you are facing losses in this period. So if investor is demanding redemption in this period, you can't do anything. You don't have money. You are in losses. So what to do? So GP जो होता है ना, general partner in that case will apply a lockup period. Lockup period is you cannot withdraw funds in that period. Is the time after initial investment over which limited partner either cannot request redemption or incur significant fee for redemption. So if you want to take your money back, okay, I will give, but I will deduct 30% of it, 40% of it. Notice period, just like employees. 30 and 90 days is the amount of time a fund has to fulfill a redemption notice. If you want your money back in January, we will give you back in March, April, May. We need some time. It's a notice period. It is written on the contract. Redemption fee can offset these costs. Manager may also have the discretion to implement a gate that restrict redemption for a temporary period. You will apply a gate, okay? You cannot apply for redemption, for example, in 2025, in 2026. That is a kind of a gate. You have closed the gate. After that period, then you can apply the redemption. Okay. This is we have already covered 2 and 10 means 2% management fee, 20% performance fee. 1 or 10 it's normally fund of fund. ये fund of fund पे apply होती है. 1% management fee, 10% redemption fee. Fund of fund is a fund which is investing in different funds. Okay. Then there's this term early investors. If you are a very early investor in a fund, so you will have some high importance. If you are an early investor, you would have some high importance. Early investor in a fund may also receive lower fee because you are the first one who are trusting them. Better liquidity terms as an incentive to invest at the fund inception. The investment interest of early investor who receive such relatively better terms are called founder class share. For example, if I am starting a new fund and you are the first one to invest in that, I will give you special terms. That is called founder class shares. Okay. This is another term. Annual investor fee can also be either or fee. What is this? Maximum of the management fee or the incentive fee. Management fee is 1%. Incentive fee is 30%. Okay. Either you will pay the maximum. With 1% management fee, 30% incentive fee, investor fee, each year would simply be the management fee unless the calculated incentive fee is higher. You will pay me 1%, but if the incentive fee is higher, do not pay us the management fee. It's based on or. We will charge you management fee, but if the incentive fee is greater than the management fee, we will not take the management fee. We will charge you the incentive fee on. But in first year, in 2025, if I charge you management fee, so in next year, if we are earning the incentive, we will take the incentive on net of management fee because we have already charged the management fee. So such a structure may also stipulate that 1% of the management fee be subtracted from the incentive fee in a subsequent year. If in 2025, I have already charged management fee, in 2026, company is earning, so I will charge incentive fee, but net of management. Okay, these are the two biases. You need to remember 3 points on this slide. Number one is vintage year. Vintage year is that year in which your investment will start. If your fund is starting in 2025, that is a vintage year. Okay. Funds originating year is vintage year. Remember this. Okay. Whenever alternative investments have two biases. Number one is survivorship bias. There is no regulatory pressure on them. There is no auditing pressure on them. They do not have to report everything. So, especially the hedge fund. But you need to remember alternative investment. They only report successful investments. For example, you have invested in 100 investments. 70% are in losses. You will not report 70%. You will only report 30% investments in your report. So that means you are only reporting the survivor. You are only reporting the successful terms, successful investment. You are not reporting the loss-making investments. That is survivorship bias. So survivorship bias is greater for hedge fund than for other asset classes because some estimates more than 25% of the hedge fund fail in the first 3 years. So you will not report the failures, you will only report the success. That is called the survivorship bias. Now your question would be, there is no check on these. No, there is no check because these are not regulated. There is no mandatory requirement for the audit. Okay, then next is, an index that does not include failed funds will overstate the return and understate the risk of hedge fund. These facts may be magnified by backfill bias. Okay, backfill bias says, we have made a fund and in fund, we have 5 investments. In 2026, we are adding one more investment. So now that fund has 6 investments. So what we will do, we will add the return of that 6th investment in 2026 as well as in 2025. We will backfill the previous years. So guys, just imagine, you will only add that investment which is successful. And when you backfill the previous year, it will increase the overall return. That is backfill bias. So which occurs when manager only select their successful fund for inclusion in the index. When you only include the successful funds in the index, and in order to fill in the previous year, index will increase the previous year return. So what will happen? It will increase the performance of the index. For example, I'm teaching level 3. There was 5 students level 1, 5 students level 2, 5 students level 3. For example, 5 students were in level 1 and in level 2, there were 4 students. So that means my result is 80%. In level 3, only 2 students reached to the level 3. So my result is 50%. But one of the student or 2 students came from outside and they joined us in the level 3. So what I will do, I will add their result in level 1 and level 2. So it will increase my overall return, overall result. That is wrong. They haven't studied in our classes previously. So that is called the backfill bias. If you are adding only the successful funds in your index, it will increase the overall return. That is called the backfill bias. So this is the formula to calculate the return. Either you can use these 2 formulas or the above one. Total fee. This is the fee for GP. GP will receive the management fee. M is the management fee. V1 is the closing value of the fund. But remember, management fee can be applicable on the opening value as well. You need to read the question carefully. Plus, performance fee either will be 0 or if the closing value is greater than the opening value, then there will be a performance fee. So GP return is management fee plus the performance fee. Okay. What is the return of the LP? Closing market value minus opening market value minus the fee. These 2 fee. Divide by the opening market value. This is the return of LP. One thing, 2 points are very important here. Management fee in some of the question will be on the opening market value. In some of the question, it can be on closing market value. But market norm is management fee is on opening market value. Market norm is management fee is on the opening market value. Okay, performance fee is on closing minus open. Performance fee. And in sometimes, performance fee will be calculated after deducting the management fee. You will take the difference of these 2 minus the management fee as well. How would we know that we have to do this? Read the question carefully. So this is the general partner return. This is the LP return.